Trump's tariff math error could cost America billions. In a stunning revelation shaking Washington and Wall Street, economists have uncovered a major mathematical flaw in the formula behind President Donald Trump's proposed tariffs, a miscalculation so significant that it could mean America's trade penalties were 4 times higher than they should have been. Could a simple math mistake be costing American consumers and businesses billions?
And everybody said no.
A White House official told reporters on April 2nd, these tariffs are customized to each country and the numbers have been calculated by the Council of Economic Advisors using very well-established methodologies from the international trade economic literature as well as policy practice. The administration calculated each country's tariff rate using this formula. The tariff rate equals the U.S. trade deficit with that country divided by the U.S. imports from that country. For example, the U.S. claims that China charges a tariff of 67%. The U.S. ran a goods trade deficit of $295.4 billion with China in 2024, while imported goods were worth $438.9 billion.
As the clock ticked toward the implementation of sweeping new tariffs, the conservative-leaning American Enterprise Institute raised a red flag, not over policy, but arithmetic. According to economists Dr. Kevin Corinth and Dr. Stan Vuger, the White House used an incorrect formula to determine tariff rates, leading to rates that were significantly inflated. The error lies in a key variable, EHI, used in calculating the impact of tariffs on import prices. The administration assumed a value of 0.25, but economists argue the correct figure should be closer to 1. That means the resulting tariffs were 4 times higher than intended. Republican megadonor and Home Depot co-founder Ken Langone didn't mince words, calling the tariff formula bullshit and blasting the administration's economic advisors for poor guidance. Critics say this isn't just bad math, it's bad economics. Even if the formula had been used correctly, economists argue it's misguided to base tariffs solely on trade deficits. Trade imbalances, they say, are influenced by a range of factors, from comparative advantage to geography, and not just by tariff policy. Markets responded with optimism, perhaps hoping for de-escalation. The Dow surged by nearly 1,400 points as investors speculated the tariffs might be walked back amid mounting pressure. Former Export-Import Bank President Fred Hochberg warned that if these tariffs are left in place, they could destabilize the U.S.'s global standing and hurt long-term investment. With fluctuating rates, manufacturers hesitate to invest in new factories, and global partners question America's economic reliability. One thing is clear: when trillion-dollar trade wars hinge on decimal points, it's not just economics, it's math that matters. In global diplomacy, the smallest error can carry the highest price tag. Stay tuned, for when formulas falter, futures can flip.